Gil Luria is Director of Research at DA Davidson and joins us this morning. Talk more about this. Gil, good to talk to you.
Thanks for having me.
Obviously, their dominance is unquestioned, but at the margin, does it raise questions about the viability or the usefulness of Lucasfilm within the company?
It does. If you think about the other franchise they wrapped up this year with the Avengers, that finished at a high. Avengers Endgame ended as the top grossing movie, where Star Wars ended up more on a low with this movie. And so it raises a question about the value of this franchise as compared to the other franchise they bought for $4 million, which was Marvel and Avengers.
So now, look, they've already amortized the costs on Lucasfilm, right? Long ago.
That's right, but the expectations from Disney keep rising. Let's not forget that this record year is the year they're going to have to comp next year, and best way to have a tough year is to comp a good year. And if you think about even the Marvel movies that they have coming out next year, they're going to be comping Captain Marvel and Avengers Endgame with Black Widow and the Eternals. It's going to be a down year, and even though that's an expectations, this Star Wars movie maybe is the beginning of that off year that Disney may end up having next year.
Gil, the question I keep coming back to is how does Disney balance the box office versus the streaming service?
Well, that is the big question. Disney is a fantastic company that has the value of its content has transcended all the forms of distribution, but we are in the midst of a very important transition. That transition to direct-to-consumer may get people excited about Disney, but let's not forget the experience retailers and brand companies have had with the transition to direct-to-consumer. It's a lower margin business. And so Disney has to make this transition successfully. It has to make it profitably. And that's a big question over the next few years.